Let me ask you a question. Can you actually improve your credit score in 30 days without doing anything illegal and without waiting years? Most people think the answer is no, because the advice they hear is always the same. Pay your bills on time, lower your debt, be patient. And listen, those things are very true. But the problem is this: that advice is slow, sometimes painfully slow. And if you're trying to buy a house, get funding, get a car, or qualify for other types of loans, you might not have 12 months to wait. You might need your score to improve in the next 30 days. So today I want to share something that most people never get taught: a credit score cheat code, a loophole. Now, when I say cheat code or loophole, I don't mean something shady or illegal. I mean understanding how the system actually works. Because once you understand how the scoring system works, you can position yourself the right way. And listen, be careful listening people out here in these social media streets telling you that this no longer works and that doesn't work, because the truth of the matter is, I've been doing this 37 years. I stay on top of what's working and what's not working, and this actually works. And when you do it, your score can move faster than most people expect. And I'm also going to show you 3 small tricks that can help your score move even faster. Now, why most people struggle with credit scores? First, let's talk about the real problem. Most people think credit scores move based on how hard they try, but they don't. They move based on data that gets reported to the credit bureaus, and that data doesn't update every day. It updates in cycles. Most people don't realize this. They think if they pay their card down today, their score should go up tomorrow. But that's not how it works. The credit bureaus only see what the credit card company reports. And that usually happens once a month. And sadly, sometimes it doesn't happen every month. So if you don't understand when things get reported, you might be doing the right things, but at the wrong time. And this means your score will move slower than it should. Now, do me a favor real quick and subscribe to this channel. Hit the like button, because we want many people to see this so that they'll be on top of this information just like you. Now, the credit score cheat code loophole nobody talks about, especially banks. Now, here is the loophole most people never talk about. It's called authorized user positioning. Here's how it works. If someone with great credit adds you as an authorized user on one of their cards, that credit card can appear on your credit reports. And when that happens, your credit profile can start reflecting the positive history of that account. Now, this doesn't mean you get their credit score, but it does mean the scoring model can see things like age of the account, credit limit, payment history, utilization. And if those things look strong, your score can improve, very quickly. Sometimes in just a few weeks. Now, when this strategy works best, let me tell you this and give you a powerful tip. This strategy works best when you're preparing for major purchase. I'll give you an example. You're buying a house, getting a business funded, financing a car, applying for a high limit credit card. If you know something like that is coming up in your near future, position yourself as an authorized user 30 to 60 days before the application, because this can help your profile look much stronger. But here's the key: not every card works. You want the authorized user account to have a high credit limit over $10,000, a long payment history, 10 years, a very low balance. For example, if someone has a card with a $20,000 limit and only a $1,000 balance, that's excellent. That shows the credit system's strong capacity and low utilization. I got to say that again. That shows the credit system strong capacity and low utilization. And that can help your profile look much stronger very quickly. Now, trick number 1, the 10% statement date strategy. Now let me show you a quick trick that can help your score even if you're not using the authorized user strategy. This one alone can improve and move scores. Most people think credit cards should always show zero balance, but here's the truth. The scoring models actually like to see a little activity. The sweet spot is usually below 10% utilization. But here's the part most people never learn. There are two important dates on every credit card if you're interested in score and how you save money. The statement date and the due date. These are not the same thing. The statement date is when the credit card company reports your balance. The due date is when the payment must be made. So here's the strategy. You allow a small balance to report on the statement date, but then you pay the card down to $1 before the due date. This does two powerful things. First, the credit bureaus see activity on your card. That tells the scoring system you're active and you're using your credit. Second, you avoid paying high, crazy interest because you paid the balance down to $1 before the due date. So the system sees responsible usage, but you're not paying the banks all that extra money. That's how you work the system instead of fighting it and working against it and seeing it keep you stuck. Now, this is an example I want to give you of the statement trick. Let me give you a small example. Let's say you have a credit card with a $5,000 limit. 10% of that is $500. So you might allow about $200 to $300 to report on the statement date. That keeps your utilization low and very healthy. Then before the due date arrives, you pay the card down to a $1. Now your credit report shows responsible usage, low utilization, on-time payment history. Those three things together help push scores upward. Here's the second trick. Never max out cards. Here's another trick many people overlook. Never let your cards get anywhere near maxed out. As a matter of fact, under the new system of trended data, you don't want to go above 30% at any time during the month, even if you plan to pay them off, because the scoring models don't know your intentions. They only see what gets reported. And when cards show high balances, the system reads it as risk. So if you want your score to move faster, keep every card, ideally for the system, under 30%. But the real sweet spot is under 10%. And studies show that people getting the highest scores in the 800s are between 4 and 7%. That's where the scoring model really rewards you. Trick number 3, timing matters before big purchases. Now here's another strategy people overlook. Timing matters. If you're preparing to apply for something important, you want your credit profile to look its absolute best. That means lowering card balances, avoiding new inquiries, making sure utilization is low, possibly adding a strong authorized user account. When all of that lines up, your credit profile can look dramatically stronger within one reporting cycle. That's why people sometimes see their scores move 20, 40, and even 80 points in a short time. Not because of something magical happened, but because they positioned the data correctly. Let me give you a quick story. I once worked with someone who was trying to qualify for a mortgage. Their score was stuck around 640. They were doing everything right, paying bills on time, trying to reduce debt, but progress was slow. So we made 2 changes. First, we lowered their card balances under 10% before the statement date. Second, they were added as an authorized user on a strong account. Within 30 days, their score jumped enough to qualify for the loan program they needed. Same person, same habits, but different positioning. And that made all the difference. The real lesson is this. Here's what I want you to remember. Credit scores don't just respond to effort. They respond to data patterns. Once you understand those patterns, you can position yourself much more effectively. So if you remember nothing else from this video, remember these 3 things. Keep your utilization below 10% whenever possible, and it's always possible. Let a small balance report on the statement date, then pay it off before the due date. And when preparing for something major, consider the authorized user strategy on a strong account. Those small moves can make a big difference, and I mean a huge difference. Credit isn't just about borrowing money. It's about positioning yourself for opportunity. Because when your credit profile is strong, doors open. Better interest rates, more approvals, more options, and options create freedom. If this helped you understand credit a little bit better, drop a comment below and let me know. And if you want more insights like this that help you align your credit, your business, and life, make sure to follow the channel, subscribe, like this video, because success doesn't happen by accident. It happens when you understand the system and position yourself the right way. Be blessed. I'll see you soon.